Hello, hello. Good morning. Welcome to another ESP to stream. Today is May 12th. It is Friday, 8:52 a.m. Before we go our to what's happening in the market right now, let's take a look as usual. Let's take a look to our monthly or weekly and daily time frames. Okay. All right, here we go. The monthly. um, as we can see here, there's no change in the monthly, right? The last couple days, this week, the month, the monthly bar has remained in range with previous one. We have April here, May here, and you can see, and we can see the range almost matches, right? This is a perfect balance for the market. And hovering around the 41.40, this breakout level here. The market was bought three times here, one, two, three, and then sold multiple times, one, two, three, four, five, six times here. And but in the last year, actually 13 months, including this one, which is the range, where we have a range here. And this level has been used to sell or buy before this day, before the year, before the big break, right? Was used as support. Now it's a resistance. And what catches the nuance to me is this narrow range here, you know, very narrow range in here, very narrow range. Narrow ranges can be easily toppled. Range is a sign the market has found balance. Markets are always looking for balance. Markets are always looking for balance, for a place where two-way trade can take place. But the thing is, markets rarely stay in balance for long. Once they found balance, the breakout of balance here can be either to the upside or to the downside. The high is weak, the low of this range is weak. Notice where it was sold from, exactly from this high, where it was bought from, pretty close to this low. So very uncertain. In kind of if this if this month crosses below this low, we still have more than um, more than half of the month to go yet, right? It's too early to say. But if this month closes below, this will be an outside buy, which is a sign that the market, which could be would be a sign the market is weak. That could be the direction the market want to go. But it's too early to say. There's range in the monthly, right? And as usual, the 13-month range everywhere where I see big range, 13-month range, another 4-month range here, and this is another range inside this range. So range inside range, balance inside balance. The breakout would be, I think, if there's a breakout, the breakout of this range would be very dynamic. Could give us good opportunities there. Now, this is the weekly time frame. You know, we have one, two, three, four, 5 week balance. You have a balance here. Market exploring above the balance, rejection. Market exploring below the balance, rejection, and the market is in balance. Quite like at the center. What I mean, what other form of balance can 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 we ask for? This is a perfect balance in the weekly as well. And right at the center of the range. Right at the center of the range. Some, this was a good trade here, the upper side, exploring above and fail, exploring below and fail. And the market has gone nowhere in the last month, in the last 4 weeks, 5 weeks, including this one, right? But if this week closes inside, inside, inside the range, it will be a perfect inside bar, The trade here is the upcoming trade could be, you know, go with the direction of the break. It's very unlikely that the next week we print another bar like this. That would mean the market is in search for information before its next directional move. But usually there's a breakout, either to the upside or to the downside. Go with the breakout. First, go with the breakout of the inside bar, and then monitor for continuation. Monitor for continuation will be, taking this high will be next, or taking this low will be next for next week. But what do we have next week? Let me take a look. What do we have next week? Is there any relevant retails on Tuesday? Buildings permits on Wednesday? Shannon Powell speech on Friday, 11 a.m. I mean, I don't see nothing else. Let me know if you see something else. There's also Fred Williams, Logan, a lot of Fed speakers next week, with Chairman Powell closing the week on Friday. I don't see nothing else, so I think the market will can be focusing in the stocks next week. I mean, continue to focus on the stock. There was not too much to watch today and this week. I guess we have Home Depot also next week. Okay. Um, the daily. What's happening in the daily? What's happening in the daily? We're covering. This is a big range here. We have 31-day range. What's the range, or what is the range? This is the range. At least the range I see. That's the range. Low is very weak. High, kind of like this high matches this one, but this is too far to be considered relevant. Well, still market can. I don't know. I don't think this is too relevant. This is like one contract behind. The new contract started here. It started to trade here, or started to trade with volume here. And I guess this is the old one. And we got a perfect balance also. We have a range, 30, 31-day range, and 1, 2, 3, 4, 5 days range here. Can you see? 5-day range here. With this bar, with yesterday being an inside bar. Okay, we got something in the weekly, inside bar in the weekly, is inside previous days. So there's a perfect balance here. Perfect balance here as well. And look at this as well. Inside bar also in the day in daily. This is a perfect balance here. Now the sign of weakness here is unbelievable here. I can see a lot of weakness in this market. The market, to begin with, is in between gaps. Too much gaps are sign of emotional trading, right? The market opened with a big gap a couple of days ago. Now when the market is open, it's supposed to open with another gap today. And look at this gap here and this big gap here down here. Look how close these lows are. And basically, the lower the gap, now the higher the gap is that's where the market was bought a couple days ago. Very weak mechanical buy. This day was bought exactly from the 50. This other one from the 50. This other one for the 100. This other one for the 200. Very close to this low. The weakness is very impressive here. It's unbelievable. This market is unbelievable weak. You know, there seems like I don't want to say it, but it seems like somebody's interested in nothing, not letting the market fall. I can see the market. There's no serious selling here in the market, right? There's no big selling. Um, the lack of buying is impressive as well. There's only trading money in this market. I still believe there is a lot of investment money on the sidelines here. Um, let's take a look on market profiles because this is what actually tells more about who is doing what in the market. And this day, I remember this day when the market took the high that was made in the overnight. I couldn't take favorable high. There was absolutely lack of buying here. The market buyers just disappeared here. There was nothing here, right? When the market made this market open this day, it just sold from the opening. The selling was unbelievable here. Now, the following day, market come up here, dry. It's just dry. Nothing here. Good selling tail, right? Good access here. Good access here. White profiles. There was I don't remember there was volume here. I don't think there was too much volume here. There was impressive amount of volume down here though. This day was has huge volume. Um, when this day happened, short covering started. Never got you. This is short cover. Oh, okay. Which look at this, right? This is the stem of the P, and this is the loop of the P. It doesn't have extension. Short cover, more likely. Lack of volume confirms, for at least for me. Oh my God, I closed. Did I close my? Yeah, I did close. I closed it by accident. Let me open it again. Dun, dun, dun. Dun, 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 dun. Oh, let's take a look at this. Yesterday, is this yesterday? Yeah, what? No, this is not yesterday. Is it? No, it's not. Okay, what this chart's load. If it does it. Okay, I haven't. Where is my profile here? Uh, let's open in the browser. And this day, we were talking about these days, right? You know, this also was balanced here. It was very wide POC. Here, here. Value was moving lower, but this was inside these days value here. So market went nowhere. We will talk about that could be some whipsaw, which actually happened. Um, but if you notice, the market opened with a big gap to the upside this day. And what happened here in the upside? There was huge volume here, selling. Lack of buyers here, nothing going on here, and selling appears here. Same thing that happened here, it happens here. So there is some selling. Volumes in the pressure. I mean, to me, the pressure is to the downside, right? It doesn't mean that the trend is to the downside, but the pressure is to the downside. Okay. Now let's see. This thing has no. This guy is not going to a lot. Let's do it again. What the heck? Man, this solver sometimes is so annoying. It's just not loading, man. The heck? I guess what I'll do is I will close it and let it open. I don't close my solver overnight. I think that's why. Sometimes it's just too much data here. I apologize for the delay. Okay, right there. Yeah, it's just too much data here that we have this is dealing with. I had to close it. All right, where we were. All right. I was the observation, the thing that I could observe was the, the selling that appears here. You know, kind of like bigger time frame selling the rallies here. It was selling. You know, you get close to this high and selling come back. Now the market is supposed to open with a gap today. We have an inside day yesterday with something very peculiar at the closing. What it was? Let me see if I can show it to you. The impressive, really impressive amount of uh, volume at the closing, just before, after the closing. Man, this one. This is the day yesterday. Notice how volume is in the lower side. And this is very disorganized histogram. This is nicer here. Volume here. Volume on the lower side. Mm, not that good, right? More volume on the lower side of the histogram. At the center, higher. If I'm going higher, I want to see this one. Volume accumulating the upper side of the histogram. Volume accumulating the upper side. Volume accumulating the upper side. So the market is dealing with this thing first. It's going to the upside here. I don't like the way how it was bought. But notice the amount of volume. This was before, I think around a 440, something like that, after the run up period, and this is a closing. You know, 12,000 contracts above. You know, big blocks being bought here in the aftermarket. just before the market closed. So there is in this rally, you know, the traders couldn't take this high. Notice the lack of taper here, lack of taper here, lack of taper here. I know what the longs will do here when the longs that cannot take trades over home overnight, they will sell here. They will liquidate their accounts, right? I mean, they close the positions, and there was a big absorption here, and this is very unusual. It's very unusual. This one add added to this matching highs here, kind of increases the odds to the upside. There's absorption here. Well, it could make sense of this rally. It's easier to take, I mean, to move the market higher in the overnight because there's no volume. And those trades could be just, there are clean now. Those positions may be covered or maybe hedged now. Once you have a hedge, you start, I mean, the market breaks, you trade the hedge, right? You trade the hedge. And but the gap calls for a trade. The gap trade is go go with the gap that is not closed fairly early. Remember a couple of days ago we have a big gap and that gap was closed almost immediately. Now we have another gap. If the gap is going to be closed, the selling usually happens or starts right at the opening, right? And if the selling closes the gap, gets inside this range, um, the immediate destination or the potential or immediately start to see the opposite side because this could be the, the destination trade if the gap is closed. Now this is a breakout also to the upside. Now this inside gap it is not just a gap to the upside, but also it's a breakout from an inside bar. The gap that we have here was a breakout of these days. But the situation, the scenario of this gap is very different. We have a shorter gap here now. We have a shorter gap, but uh, the circumstances are different. There is nothing similar today with this gap to the day, to the couple of days gap that we have. There's no similarities here. This is a completely different situation. Most traders just, oh, okay, this is a gap here, we have a gap here, and the last time the gap was closed, this time is going to be closed. Let's keep selling. But they don't consider, what has happened here. On this gap, we have this gigantic gap. We have a huge spike in the overnight. Gigantic spike in the overnight. Plus the inventory here. And there was different conditions that we have. Very wide POCs here. And you can see here, for example, POC was going lower here, was migrating lower. And POC now is migrating higher here. Kind of not wide, not prominent POC, only 9. This one have 12, this I believe has 13, 12, 13, something like that, which is the maximum. And overnight inventory is 100% long. You have sales down here, and boom, there's pretty much nothing down here. Where this market was bought, it was bought on March high. Very mechanical low. Then held back, then sell, then bought from last as close as possible to previous day high, you know, held back here. It just tells you what kind of trading the overnight usually is. Mm, Overnight traders are usually the weakest ones. And being Friday, We got Friday, end of the week, end of the day. Um, Notice well this market is being sold from. You got one, two, three highs here. So there's some odds that the market keeps going higher here. We have only 10 more minutes to the opening. Now, the scenarios, what scenarios do we have today? Can we think of? No, breakout, we'll go with the gap, monitor for continuation. There was a not revisited overnight POC from yesterday. Now has been taken in the overnight. Monitor for continuation here is this high here. The next thing the market can do, if I have a long, will will be taking this high. After that, this high, the next one is this high, and then closing the gap. Notice how this overnight has a prominent POC almost right at the center of the gap. Closing the gap puts the opposite side of this range as destination trade. Downside monitor for continuation. We got last, settle, low, which is also much high. The impressive amount. If this market can take this area here that I highlighted here, is or this area here. And notice how also there's a lot of volume here in the upper side. If this volume is taken, it has a lot of reason to, you know, we have this amount of volume here, volume here, volume here. This cluster below. It is kind of like a special. It would be different if we have this rally here, the second part of the day. This was a rotational day yesterday. Remember opening inside previous day range, advertised chop, and increases there also being a rotational market. We have a rotational market yesterday. And I would feel better if instead of having this kind of profile, we will have, or the histogram would be something like this, right? Volumes on the upper side and kind of like drying. When the market goes low, it just dries. The volume dries here. Volume dries here. Or something like this, right? Something dries here. It wasn't the case here. Wasn't the case here. Not here, right? It was quite the opposite actually. And I would pay special attention to this level here. If this level is taken, the market can close the gap, but if this level holds, there could be some upside continuation here. But if the gap is closed, the market starts trading inside this range. I will start monitor. I will start seeing how value develops. Also, the last Friday we have this huge rally, and traders do what it works until it doesn't work anymore. The memory, right? They remember. Traders remember what happened last Friday. Okay, it's going to happen now again, right? One, two, three, four. This big rally here, big rally here, and this day was a consequence of the market being too short. It was extraordinary short. There was a short cover. The traders don't put. Uh, then you use context, right? The market has a lot of things here, right, to deal with. A lot of shorts in the market. Now we don't have too much shorts in the market. The market actually is full of longs now, right? I'm not saying the market is going to break or is going to rally. I'm just stating the odds here, the odds of what can happen. I don't use this to trade, right? But I have noticed lately that this could be in this market, that lacks when the market lacks serious money or bigger money, these kind of blocks kind of start playing some uh, more relevant role here. Now, what I'm going to do, I got too much data here. I'm going just to leave those ones because this is what I need. It allow me to see this. Well, I mean, for example, what the heck is this? 510. Oh, this is this day. This is the aftermarket, pre-market, pre-market here. This is the overnight. We have the overnight. Am I right? Oh no, this is 5.5. This is way back. This one is not. This is not relevant. The 510 is during this day. It's a pre-market. The market has to deal with this too. Well, they're how curious, right? How curious how this is. There's a lot of trading around this area. Hmm. 510 this day. Again, this level being used to buy 54. Look at this. This level here is this now has been replaced by for overnight hard back and POC kinda. Alright. 5-2. I still keeping this one because there was a lot of volume. I mean, now this level here, the 5-2, has yesterday. There's a huge amount, 12. Actually, I would say maybe 7, kind of like 19,000 here because in this area, way more than here. But don't I don't focus too much on this. I don't give too much relevance. Just put it there. When the market comes down here, what I do is I see how the market reacts to this. But all these levels here, this shadow area, can also remember we were talking about this the volume, the accumulation volume this side, right? But notice how there's no taper on the upper side. This is a sign the market, the auction to the upside has not ended yet. They still had more to go. When it's going to end, nobody knows. There's not a bell that rings that will indicate us, oh, the trade has been completed. Right? There's not such a thing. Uh, we just have to improve of observation skills, to see what's happening. Now, the most important thing before the opening, the gap. What the market does with the gap. 100% overnight inventory. But then, you know, no. For 170, 3 points. Closing the gap, 41.45, 5 points. I mean, this is not bad actually. 41.40, very cheap, kind of cheap. All right, the bigs. How much is the bigs? It was 15. It's increasing. The cost to open is increasing. The market is not moving, but the big is increasing. Well, I guess yeah, This is better. This is better reflection because I think yesterday the VIX was I guess around 15 or below 16. I might be wrong. I guess but if the VIX is increasing, it is just reflecting the risk the market is having. I still think 16 is just too low. It doesn't reflect the amount of risk the market is having. All right. I will take a small break. I will come back just before the open. Unless you have any questions, please just let me know. All right. Come back. All right. Market is open. There's no taper here in the lower side. Look. Gap is holding. Oh boy, look at the volume. Volume is lower than yesterday. Will it be a quiet day? I mean, the gaps are sign of change, but too many gaps in this market already. You know, we have one big gap here, another gap down below. You know, one gap here and one gap here. Yesterday, a couple days ago, another gap. Now another gap. This is taper. Taper here. I mean, this taper is better than this one. But the relevance here is the gap. The important thing is the gap. The gap has not been overnight inventory is 100% long. Okay, counteraction to overnight inventory would be a break. Now, is the market going to break? Is the market doing something about the overnight inventory? Boy, I had to do everything manual here. Oh, this inventory is long from the overnight. Oh, first thing in the lower side, overnight hardback, overnight POC, something in the background, this level, and most important, this one. Wow, there's a lot back and forth here. The gap is holding. The gap is not being challenged. Overnight inventory, overnight long inventory is not being liquidated. But the thing is, it's not doing much. You know, this we have almost 5 minutes into the opening. Um, it's not doing much. It dies here. It doesn't have much here. Yeah, you can see very different the scenario here than up here. Yeah. In this day we have this big gap to the upside. And now we have also, I think this is a significant gap, but it's not having the same. I mean, not two days are the same. I mean, that as well. No two days are the same. Now, the closer the market gets to that halfback, there is some very mechanical buying there. Man, it seems like we're going to have low volume here. 4, 2, 3, 4. If the market keeps doing what it's doing, we will have about the same amount of volume than yesterday. But usually the first quarter of the period is the part of the period that has the most volume. at the opening. It tend to decrease as the period develops. The most important thing, the gap is holding. Hmm, look at this. I didn't see. This weak level has been corrected. This high is no more. Wow, very narrow range. Very narrow range. If I had a long here, because I use options, probably I would have closed by now. Max is not doing. It's just taking too much time here. Okay, now that low is not good. Uncomfortable close to hard back. Come on. Come on. Don't tell me that you're going to rally from here. Gosh. Right from hard back. I mean, I am not this kind of trader, right? But this is because these are some fast trades. Um, Fast trades go against what the market, against the movement the market is doing at the moment. In this case, the market is breaking. The trade is by halvback here, for example. But the, the thing of these trades are very fast, right? The stops has to be very, very tight. Okay, very tight. One tick and that's it. One tick, two ticks stop, and that's it. Because what the risk of this kind of trades is it gets to halvback, for example, which is a weak level, and weak levels usually don't hold, right? The market usually comes back and and, and takes that level out. And it can have really further continuation. In this case could be downside continuation, right? Just forget about the gap. Just I am this is a kind of like a guidelines, right? And depending on what kind of market we're dealing with, because not all markets are the same. There's a market when could be there's a lot of shorts, for example. Right? There's a lot of short inventory, so they also could favor the upside, right? Because the potential for short covering could be of relevance. We don't have short inventory today, for example. Right? We have long inventory actually, a weak long inventory, and that trade buying the halvback can be very risky trade. It has more risk than buying halvback in a day, but there's a lot of short inventory. It actually favors that side. But I am not that kind of trade. My trades tend to take time to develop, and I need to see the market do something, to try to get in sync with what the market is doing at that moment. Now that's a gap. Gap held is gap is holding. The lower the gap, you know, the higher the gap is. Come on, man. It just keeps adding more. This market keeps adding more weakness. But that's the trade, no? The direction of the trade is to the upside. The tone of the day is to the upside. Saddle is below. way below, like 15, maybe 50, 15, 20 points below, handles below. Yesterday, seller was the opposite, was like 20 points higher, 15, 10, 20 points higher. The tone of the day was to the downside. Yesterday was an inside day. Now we have a we have a we have a day that has a breakout to the upside. It is just so hard for me to go to take this long here. There's a nice taper here, nice taper. But what prevents me to take this long is coming from this hard back here. But the thing also, it is that is just one one point, right? It's just one piece of information. The other, I think, the most important piece of information here is the gap. We have a gap here to the upside. That should take precedence here. The gap is holding. Overnight inventory is long. Market don't want to deal with the overnight inventory. Just looking to the upside. What the other markets are doing. Gold is rallying. Gold has closed the gap actually. Bonds are kind of like having a small rally there. This is nice taper here. Very narrow range, gosh. Very narrow range. High volume on that area. I mean, in the two ticks. I also have a two ticks charts where I see my histograms. Higher volume in if I use my one tick chart would be 10K instead of 5, which is what we are seeing right now at Sen. Now, look look at the time elapsed. Half of the period now. Is this half of the period? I don't think so. It looks like again we're going to have lower volume today. This looks like volume is decreasing. So if I am long, you know, be careful. It's something. It's some flags are that telling me, okay, be careful. Even though long is the last thing I want to be because the situation of the market that trades to the upside. Right? The market is moving to the upside because of what? Because of the gap, right? The gap is telling me that the market has not challenged the gap low. The gap remains. Now, a low is to me is not good. It's right where Halbag is. No good to me. Next thing to the downside, if the market takes the Halbag, POC is right there. It's right there, very close. But below that, there is some serious risk. Could be some serious resistance where that blue line is, and right at the high of yesterday's profile as well. So closing the gap could be a sign of weakness, but remember it is just one piece of information. The other piece of information is the volume around or between settle and last. Gosh, look at that. Very narrow profile, very narrow period. quiet day. Such a quiet day to be a day with a gap. Now, again, I'm going to say this again. Gaps are a sign of change. Gaps are also sign of emotional markets. I mean, too many gaps are sign of emotional gap. We have had too many gaps in the past week. In the last 7 days, like four gaps in the last 5 days. Were very emotional markets. Okay, halfback has been taken. Still no good. Still no good. That could be better. Okay? That could be better. Now we have a better low now. Wow. Oh, wow. Everything comes from that low from the halfback. Okay. Now this low is not good. Not good at all. It was weak here, but it's a mammal here. Uh, can you see what value is? Value is higher, right? If the market keeps coming down, market keeps coming down. What I expect at least is this value to move inside this value. If this value cannot move inside and the market keeps going to the downside, but value that remains higher, there's a good also that we have a short covering rally at the close or at the end of the day. Can you see the kind of trades that I was talking about this one? When we were talking about the trade here that happened here, there's a fast trade, a really fast trade. You got this high here, and what's your stop? One tick, only one tick, right? And that's it. One tick, that's it. The market goes against you, you're out. Have to be very nimble though to do those kind of trades. And don't fall in love with that trade. If that trade doesn't work, boom, out, you're out. Do not fall in love with trade. It's unbelievable how that gap was close. Huh? in the first period. It was closed. It gives another gap that is closed. That is, oh boy, look at the volume there. It's going to be even lower than I expected. 5 more minutes to go. Oh no, seven. Seven. It's come. And let's move this a little bit lower. The expectation is even lower than that. Very low volume here. Now we have lower volume. Where the market is going, it's going higher, right? Market is higher, but it's not attracting volume. But the day is just starting. The day is not over yet. Actually, the day is just starting. Dun, 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 dun. Market has come back to the opening, very heavily traded relative to 2 days, not relative to any other day. There's high volume. Notice the volume around the opening. That the green dot is the opening. This one here. 2 days low is very weak, very weak low. Yeah. Very weak low. Closing the gaps is such a short time after the opening. It's not a good sign. Sign of weak market. Buying from previous day high also is not a good sign. But that doesn't mean the market is going to break, right? I'm not saying that because the market actually is to the upside today. Market is to the upside. You can see value, you can see price. What else? Market is to the upside. How the trade is conducted, that's what I want to see. Value is higher to begin with. Overnight long, 100% long inventory, kind of like has been, I think it was deal with. Do you remember where the market, the overnight was bought? It was bought from last, right? I bet you forget that. Look at here. Exactly from last, exactly from to the tick. Now we are to the tick as well, but there's not too much inventory now. All of this inventory has been dealt with. There's no more longs here. The loans that remain, I think, are these ones here from these huge volume blocks from the overlay. Gosh, the volume is going to be even lower than I thought it was going to be. Look at this. Gosh, very low volume. Maybe here. What's the direction the market is going? Market is going to the upside, right? Market is going to the upside. Why? Why market is going to the upside? Because it's higher than yesterday. If you see the market going to the downside, you are seeing a different time frame. Okay? Why I'm seeing you can be right. I can be right. We both can be right. The thing is, we might be watching two different time frames, and that's the reason why I don't call trades. Right? You can be right. The market is going to the downside. I say the market is going to the upside. Right? We both have different opinions, quite the opposite from one from each other, and we both can be right. So if I call trade and my time frame is different than yours, so how that is going to work for you? It doesn't work, right? We have to have some market understanding, and the main thing is to beat on strategy. Once you get once we get a self understanding and market understanding, using the same information, right? We both are seeing the same information here. I see market going higher, and you see market going lower here. The thing is, the time frames are different, right? Time frames are different. That's what we got from also. If I observe the daily, the weekly, and the monthly time frames, all them can be different. One time frame, a bigger time frame can be in range, the other one can be breaking, and the weekly can be breaking, and the daily can be rallying. All three can be different, and that's a possibility that happens all the time. The odds are increases in the direction the market is going when all time frames are in sync. If the monthly is going higher, the weekly is going higher. Wow, look at that. What was that? News, consumer sentiment. My God. Consumer sentiment right there. 10 a.m. Look what that market was bought. You know, that last. Unbelievable. All right. Last has been taken. Gap has been closed. All right. That's my. That's this volume. This area is what I want to see what the market does around this area. You know, can be taken. It can take it and then have a rally here. We can have downside continuation here. But this is a very important area to me, where the market is right now, because we have this from yesterday, this area. If this volume is taking, all this will be forced to liquidate, which can bring the market lower. If not, this could be short, it starts recovering. short covering of this inventory here. This break is as I think it's as good as this day. Gap has been closed just like this day, right? Just like this day. You have some exploration above. The difference it took this high, this range high. This is inside this range. Let's close the gap. That's it. No more. Right? The trade calls the opposite side of the range. To monitor closing the gap puts the market the opposite side of the range as a destination trade. But I have this area here I'm looking at. Still hasn't crossed that area. Next reference on the lower side, overnight low. All the signs in the morning pointing to the upside, right? But when the market did not have extension right after the opening, it gave us a short, a very narrow range. That was sign that something, something could happen there. If I remember when I say when we were talking about if I'm long bull, I would have closed my position here because I don't like how the market is developing, and that's monitored for continuation, right there. Another mechanical buy, overnight low, much high. These traders, these longs are not giving up easily. These ones, there's a lot of trade here, a lot of volume here. What the news was University of Michigan consumer sentiment preliminary. Wow, that's a huge forecast was 63, actual 57.7. Very low consumer sentiment there. Now market has re-entered. Value is overlapping now. And this break is based on news. Remember that. Alright, alright, alright. Now, having a short, what I don't want is, I don't want to see market selling for mechanical references. Look at where the market is now, sell. Right? Sell. All of the overnight inventory is out now. This high is history. The buying coming from last also is history. My short don't, I don't want, you know, I don't want the market to come out of this range. Now the conditions of the market now. If there was really good selling, first the market would not have been selling from settle. This is the like a second time it's coming to settle. It's coming back to settle. Now as back is also last. Hola Luis Fernando, ¿cómo estás? Ah, las opciones son hay varios tipos de opciones, ¿no? Hay opciones que son diarias. Eh, el, el CME implementó unas opciones, creo que no hace mucho, tendrá pues un año, ¿no? Quizás, que implementó las opciones diarias, ¿no? Que expiran todos los días. Hay una gran actividad de eso ahora. Y hay opciones que son semanales también. Esas expiran los viernes. Y hay otras opciones que son mensuales, que expiran a fin de mes. Y hay otras opciones que son trimestrales, que expiran con el contrato, que cuando con el cuarto, el cuarto de mes, ¿no? Cuarto de año. Y que es la expiración del contrato, porque el contrato dura 3 meses. Look at this, man. Ahorita seguimos hablando. Mira cómo va esto. It took Cedo, tomó Cedo, tomó Last, it took Last. Now it came back right to, right to, okay, right to yesterday high. Y expiran el viernes, ¿no? Bueno, hoy día estamos viernes. Hay opciones que son diarias. Hay una opción que es diaria del viernes, que expira el día del día, ¿no? Y hay otra, una segunda opción que también expira hoy día, que es una semanal, que son los weekly. Y hay veces, creo que el mes pasado coincidió el viernes con fin de mes. Entonces había tres tipos de opciones que expiraban al mismo tiempo, ¿no? Que la diaria, las semanales y las mensuales. Y cuando eso pasa, o sea, cosas imprevistas pueden pasar, es riesgoso. A veces cosas que inexplicables pasan. Y mucho de eso se trata de mantener, porque los market makers tratan de mantenerlas a veces en rango, ciertas opciones, dependiendo de lo que les convenga, ¿no? Compañías con muchísimo capital. No sé si te contesté bien, si es lo que querías, si, o quieres alguna aclaración más. Okay, the trade here, the downside trade, you can see the market going higher, right? Going higher with lower volume, very low volume. Market was going higher, which means that there was higher prices were not attracting more buyers, and the higher prices actually dry the buyers. And then we got mechanical activity, buying coming from half back, buying coming from remember when it stopped it right here, then it stopped it right here, and then it stopped it right here. Okay, that was a sign. And now the thing is, consumer sentiment is news, right? So that's the odds. What would have happened, for example, if consumer sentiment was quite the opposite? Instead of being lower, it would have been higher, right? We never know. We never know what could have happened. That number could have had been quite higher instead of being lower. ¿Cómo te va? ¿Estás aprendiendo? Mira, con respecto a las opciones, esto no me has preguntado, pero considero que te va a servir. Con respecto a opciones la manera como trato con opciones es muy diferente a lo que la mayoría hace, ¿no? Cuando si empiezas a averiguar opciones, si empiezas a estudiar un poco de eso, vas a encontrar una información que es muy diferente a la que yo uso aquí. Ya vas a encontrar validaciones, opciones, expiración, time, ¿cómo se dice? Intrinsic time, intrinsic value. Wow, por ahí no sé cómo traducirlos al español. Eh, Cuanto más cerca está la opción de expirar, o sea, tiene un valor, el tiempo tiene un valor también, no solamente la opción, sino el tiempo. Te voy a poner un ejemplo, por decir, vamos a poner esto de aquí, ¿ya? Ahora 45 es un put, ¿no? El strike es 41.45, here. Nota cuánto tiene de valor. Está lo que se llama in the money aquí, pero ¿cuánto tiene de valor? De 45 a 42, ¿cuántos son? Son 3 puntos, ¿cierto? 3 puntos, pero esto vale 10. Lo que está negociando acá también es tiempo. Cuanto más tiempo, cuanto más cerca esté la opción de expirar, en este caso expira a las 4 de la tarde, el valor del tiempo va a ir disminuyendo. A las 3:50, a las 3:55 de la tarde, esta opción probablemente va a valer 3. Ahí mismo donde está, puede valer 3 o de repente 3.5, una cosa así. Ya, ¿cómo se llama? Uh, es el valor intrínseco. Y, pero no uso yo eso. Hay también otras cosas que es el delta, el teta y no sé qué cosa más. No uso eso yo. Yo utilizo esto en lugar de comprar futuros, por decir aquí. Comprar o vender futuros utilizo esto. Y me da cierta libertad de movimiento, ¿no? Porque por decir si estoy short aquí, vamos a decir que lo vendo aquí, yo quiero ir short. no tengo ninguna razón, solamente es un ejemplo. Le voy a short 10. Está. ¿Cuánto vale? 45 y compro uno a 10. ¿Ya? Estaba a 10, ¿no? Ahora se está acercando a 45, está subiendo, se está moviendo en contra de lo que yo estoy. ¿Ya? Y ahora está a 9.25. Ya perdió un punto. ¿Ya? Cuando estaba como por acá, una cosa así, ¿no? Algo así, no sé dónde estaba como por acá, ¿no? Son 2 puntos, por acá se movió solamente un punto. Puede llegar hasta aquí, puede moverse un rato aquí. Si se mueve un rato aquí, ¿ya? Esto va a empezar a subir, un poquito va a empezar a subir. En todo caso no voy a perder mucho. Todavía tengo cierta libertad de movimiento cuando hay bastante volatilidad. No es, ¿ya? No es algo que yo haría ahorita, por decir, ¿no? O sea, vender o comprar ahorita vender o comprar un put, por decir, que es comprar esto, porque pienso que el mercado puede caer, por decir, ¿no? Pero comprar aquí, no, ahora vamos a otro, ¿no? ¿Qué es lo que está pasando ahorita? ¿Por qué compraría yo un put aquí? Yo, si el mercado tomó esto, a continuación sería tomar este de aquí, pero ha regresado, se está vendiendo muchas veces el seller, se está vendiendo muchas veces el ask, ¿qué pasa? Que es también hardback. Entonces es una manera muy mecánica de vender. Es mi riesgo aquí es alto. Y entonces no haría yo esto. Si tendría que hacer algo yo aquí, tendría que haber hecho acá, hasta cuando este mercado compra de ayer, compró de ayer, si recuerdas exactamente, ahí lo compró. ¿Ya? Y de ahí tienes un rally para arriba. ¿Ya? Y entonces aquí en la parte de arriba, ¿dónde está esto? ¿Ya? Aquí con esta parte estaba aquí. Estas opciones estaban, ¿a cuánto estaban? Cuatro estaba. Cuatro, entre 3 y 5, una cosa, no recuerdo muy bien. Y aparte estaba así, aquí. ¿Ya? Entonces mi riesgo, lo más que puedo perder son 3 puntos. Pero otra vez, caramba. Pero mi stop, cuando, cuando, cuando yo considero que mi posición no está funcionando, es, ok, primer sign puede ser aquí, si empieza a venderse de aquí, ¿no? Pero podría ser, para mí hubiera sido quizás, si el mercado toma este high, ahí cierro, ¿no? ¿Cuánto voy a perder? De repente 1 o 2 puntos. Es todo este movimiento hacia arriba, son como 8 puntos desde esta área, 8 o 10 puntos de acá hasta acá. Pero estas opciones se hubieran perdido quizás 2 puntos. Ya, entonces, es una forma totalmente distinta de trabajar. ¿Ya? Requiere en realidad ah, un poco, un entendimiento del mercado un poco más profundo. ¿Ya? Necesitas estar un poquito más avanzado, por decirlo, ¿no? Si quieres hacer esto, estudio, o sea, yo te recomiendo que de repente tengas uno abierto y solamente observes, o de repente hagas un papel, por decirlo. Es muy, muy distinto. Ya, es mucho riesgo esto de aquí. ¿Ya? Es mucho riesgo. Si uno, por decir, pierde acá haciendo directo futuros, con esto lo que va a pasar es que vas a perder más. ¿Ya? Este, es una buena opción de manejar riesgo, pero requiere una mejor apreciación de las dinámicas del mercado. Y conocer un poco más a más profundidad cómo funciona los markets, ¿no? En este caso el IS. Una forma de menor riesgo puede ser, como te digo, puede ser esta, ¿no? El micro, acá un punto son $5, ¿no? Puede ser eso, o también puede ser el SPY, ¿no? O el SPX, ¿sabes qué cosa es el SPY? Sí, puede ser el SPY, aquí. Comprar uno de estos, por decir un movimiento grande, son $10, ¿no? Oh, pues muy poquito dinero, dice, ¿no? Si compro el IS directo sería $1.000. Sí, sería $1.000 si ganas, pero si pierdes también sería $1.000 si pierdes. Pero uno necesita uno necesita exponerse, ¿no? Una cosa es estar mirando y de repente hacer paper trading, pero no es, hay un componente muy importante ahí que no está presente, que es la parte emocional. Una cosa, lo que pasa muy mucho es que muchos hacen paper trading, hacen mucho dinero en papel, pero al momento que se van live al mercado, ahí es donde no funciona, porque ignoran una parte importante que es las emociones, la parte emocional, la parte cómo estás tú hecho, cómo estamos hechos, ahí se empieza a, a tomar una mayor preponderancia en la forma como trabajas. Cuando empiezas a sentir la emoción, cuando empiezas a ver que el mercado se va en contra tuyo, diablo, digo, ¿qué hago, no? Esperas, o cuando tienes una ganancia y ¿qué hago? Cierro, o quiero ganar más, ¿no? Y de repente te das cuenta de lo que estabas ganando y ahora estás negativo. Oh, entonces todas esas emociones no entran en juego cuando uno hace paper trading o trading papel, ¿no? Eh, entonces, esto te disminuye el riesgo. Pues sí, pues, ¿cuánto costaría esto? ¿No? ¿Cuánto es? $400 esto aquí? $400 comprar acá, 408 y en todo el día $4. No, no sé, nunca he hecho esto. Ya, pero es esto, ¿no? Pues el movimiento no es grande, ¿no? Pero te expone a ese hit, ¿no? Que uno necesita. Otro quizás podría ser este, ¿no? Ah, ¿es eso? SSD. Oh, SDS. Ya, SDS es short, ultra short. Um, ¿Y cuál era el otro? Oh, es. Ya, ok. O podrías hacer esto, ¿no? Inviertes menos, pero tu riesgo también es menos. Hasta que aprendas, ¿no? Hasta que aprendas, te familiarizas, ¿no? Pues una cosa muy distinta es estar mirando y otra cosa es estar en el trade. Son dos cosas que uno necesita. Ahora, mira, Dios santo, mira cómo está este. Tenemos 5 minutos. ¿Cuánto es esto? Maybe como 15, 20% menos que ayer. 20%. 19.49. Wow. It's a lot of volume. Ujú. Y básicamente, o sea, lo que está haciendo este mercado ahora, o en los últimos meses, es solamente puro trading, ya. Y trading tiene que ver mucho con inventarios, ¿no? Este inventario estaba long aquí. Ahí mira, donde apenas acaba el volumen y ahí se queda. ¿Cuál es lo siguiente? Acá tienes más volumen y más volumen aquí abajo. Todo esto de aquí, esto ya es historia ya. Solamente considera uno la parte que está expuesta, ¿no? En este caso esto está expuesto. Esto cubre esto de aquí, pero no, ¿por qué considero esto? Porque no tiene nada aquí. No, simplemente el volumen decrece y estos de aquí probablemente todavía estén en buena parte. Oh, bueno, no te preocupes. Ajá, ajá, que estamos para ayudarnos. Y digo, ah, y busca formas de, siempre, el objetivo es aprender, siempre aprender, tener una mentalidad, un mindset, una mentalidad, ¿no? De aprender. Uno te tiene que gustar, otro que te tiene Y tienes que tener una pasión por aprender, ¿no? Porque uno nunca va a terminar. Este es uno de los campos donde todos los días hay algo nuevo. Es increíble, ¿no? Y lo escuchas de tanta gente que tiene décadas de trabajando aquí, ¿no? Que siempre hay algo nuevo, siempre estás aprendiendo. Y son ciclos también esto, ¿no? Al mismo tiempo, son ciclos, ¿no? Estás, si tienes un mes trabajando, estás familiarizado con lo que pasa en las medias horas, por decirlo, ¿no? En los periodos de media, porque cada día se repiten los periodos, ¿no? Periodo, periodo, otro periodo. Pero después, cuando trabajas en una semana, ya sabes un ciclo semanal. Después tienes un ciclo mensual. Después tienes un ciclo de contrato. Cuando vas a través de dos, pasas por uno, dos, tres contratos, ya sabes más o menos qué es lo que puede pasar en contratos. Y después luego tienes un ciclo anual también. ¿Ya? Lo que pasó en este año se repite con lo que pasó el año pasado, cómo se relaciona con lo que pasó el año pasado. Entonces vas relacionando, ¿no? Luego tienes ciclos inclusive ciclos de gobierno, de cada 4 años. Hay un factor ahí importante que es el factor político, ¿no? Que también afecta, creas o no. Esos son ciclos. ¿Ya? Y más posibilidades, tus probabilidades aumentan de ser exitoso, aumentan cuanto más ciclos atravieses. ¿Ya? Muchos no pasan de 2 meses. Lamentablemente es así. ¿Ya? Estadísticamente las cuentas de retail que se abren eh, se cierran. 7, 8 semanas es lo que dura. ¿Ya? Porque uno se mete a trabajar, me incluyo, uno se mete a trabajar sin tener una idea de verdad de lo que está haciendo. Y hay una cosa mental ahí que nos hace creer, es decir, no pensamos, ok, voy a ser doctor, entonces agarro mi bata, mi bisturí, y me meto a trabajar, me meto a operar, ¿no? No pensamos en eso, pero pensamos que voy a abrir una cuenta y voy a hacer mucho dinero aquí. Entonces hay algo ahí, ¿no? Que requiere preparación. Wow. Ok, son las 10:30. Unless you have any other question, my friend, I guess I'm going to call it a day. And wish you a good rest of the afternoon. 41:20. Con respecto a las opciones de solución, Oh, no, no te preocupes, mijo. No pasa. Aquí por decir, creo que hablábamos de estas opciones de $10, estaban 10 puntos, cuando creo que estaba por aquí, estaba 10 puntos, es 45, ¿no? Estaba 10 puntos. Ahorita, al recorrido de 45 a 35, apenas son 7, 5, 7 puntos, ¿no? 7 puntos. Todavía no está, es not in the money here. ¿Ya? De 10 a 12 son 2 puntos de profit aquí, pero todavía no está en el mercado. O sea, si se cierra aquí, si se cierra, ahorita se cierra el mercado, perdería uno 10 puntos. No es poca cosa, son $500 que uno pierde. Si cierra ahorita, ¿ya? Pero va a cerrar hasta las 4. Y te das cuenta cómo está ahora 12. La distancia de 40 a 45 son solamente 5 puntos, pero esto está 11 ahora. Estaba 12, ahora está 11. Y el spread está bien, un buen spread, está bien, solamente un tick de diferencia. ¿Ya? Pero uno toma tiempo esto. Si decides hacer eso, toma tiempo, ¿no? Date tiempo y ten mucha paciencia, ¿no? Y yo te recomiendo aprender, aprender primero de repente con un Spike, con el Spike, o con un LSD o LSO, ¿no? Que puedes utilizar estos mismos, puedes utilizar estos mismos gráficos, pero te da más chance, te da más tiempo para que aprendas, para aprender, ¿ya? Te da más tiempo para aprender, para ir mejorando, ¿no? Porque uno comete muchos errores, ¿no? A veces. Muy poca gente en realidad es exitosa aquí, muy poca gente, te sorprendería saber, ¿no? Pero siempre hay muchísima gente que entra. Y yo creo que bueno, a Pete Stallmeyer escuché decir esto, ¿no? Yo estoy de acuerdo con él. No hay otro negocio en el que quisiera estar. Ok, Luis Fernando. Entonces, a ver si Dios quiere, nos vemos más tarde. Cuídate, ahí nos vemos.